Davin, hello.
Yeah.
What's up, bro? So, you're on my YouTube channel right now. Are you okay with that?
Yeah.
Cool. What's a specific question you have about like getting to stocks?
Oh, there's like different lines, different colored lines. What does that mean?
That's a good question. So, there's gonna be lines like the SMA line, the there's like plenty of things like MACD, RSI. You would have to like separate the charts on your app or your computer and then look up what each means. Like when the stock's going up, like a lot of the lines are gonna be going up and like know what each are like representing. So like some is gonna be volume. That means how many people are buying and selling it. So the main line that you should on the main graph is obviously the price line. So like what the price is at. There's all other lines that are going to be like how overbought or oversold stock is, or how much people are buying it or selling it. So you need to know those things to like invest in it or trade it. Just like if you don't know it, Google it. Hey guys, welcome back to my channel. So today we have another video, and I'm gonna try to make it short. We're gonna talk about how to get into the stock market. You just turned 18. Now you're interested in the stock market. You know a little bit about it. You don't know where to start. Well, you're in the right place because I'm gonna show you. Some people have asked me like, Smay, where do I start? I'm interested in stocks. I have time now. How can I start? Where can I start? I decided to make this video because I didn't want to keep repeating myself, so I would just say it once, have it here. They can watch it as much as they want, rewatch it if they want, and everyone can watch it, so it's great. Before I continue with this video, I just want to say that this is not financial advice. This is what I do, and if you want to do it, you can do it, but don't sue me. There's plenty of brokerages you can use that are now zero commission. So there's Robinhood, there's TD Ameritrade, M1 Finance. Did I say Webull? I use Webull. Webull and Robinhood, all the ones I mentioned are 0% commission. So every trade you take, they don't take commission. So I'll have two links below. I want you to click either the Robinhood or the Webull, or you can click both of them. You can get one free stock for signing up with Webull, and with Webull you'll get another free stock for opening an account and depositing money. The value of the stock is up to like $1,400, I'm pretty sure. Why not? It doesn't cost you anything. You can always take the money out. You don't have to spend the money. You just put it in, get the stocks, take it out. Or trade. Up to you. Robinhood, they only give you one. I'll have both links below. For any brokerage, when you go sign up, they'll ask you for your age, your social security, your just personal information. They just want to check like if you're a U.S. resident and all that. It's fine. And then they're gonna ask you questions about your trading experience. So do some research and then put on it you have some experience, or be honest. You're gonna need to decide between a cash account and a margin account. A cash account is an account where you're solely gonna use your money, and a margin account is gonna be an account where you use your money and leverage. So it's called leverage is just a term for when you borrow their money. You're gonna have 2,000 in a margin account, at least for Webull. And then let's say you have 2,000 in your margin account. Now you can borrow another 2,000 from Webull, or actually like 4,000 more, I think. So you'll be able to have buying power of 6,000 instead of just 2,000. I use a cash account because if you lose a margin, like if you lose their leverage money, then you're kind of like in debt. And I don't even want to know what happens if you lose their money. So once you get approved, there's a few terms you're going to need to know. What you want to know when you open up a brokerage is if you are an investor or a trader. You will lose a lot of money if you don't know the difference. When you invest, it's more long term, so you hold it believing in the company that it'll be better in the future in years to come. So a lot of successful people believe in this, and that's fine. But me personally, I trade because when you have a small account like 1,000, 2,000, 5,000, you'll want to start small, and when you trade, it's very volatile, so you'll be able to make a lot of money, but there's also the risk of losing a lot of money. Pick one, I mean, you can do both, but just know that there's a difference. When you're on Webull, you'll have your positions, and then you can have your long-term positions, and then your trading positions. Let's talk about when you open up a brokerage and you've deposited your money, so you transfer it from your bank account into Webull. You get your free stocks. Hallelujah. You got your free stock. Now you have some money to play around with. So you find a stock you want to buy, and you go click on it, trade, and then you consider limit order, market order, stop loss, or one triggers the other. So I'll let you know what each means. So limit order is when you want to buy and sell at that exact price. There's no negotiation. And then a market order is if you so the market always goes up and down like that, right? So you'll be able to buy the stock at the price that the market's at. Let's say it's at $100, but then next second it's at $99. You'll be able, they'll decide for you whenever your order goes through what you get. So it could be 99, it could be 100, but why I use limit is because if I want to get a good position, I will want that 99 position, and then once it goes up 100, I'm profiting $1. So it's like when you get in well, you can feel confident in your position that you'll profit. So it can fluctuate, so the market will fluctuate bad, and you'll get a market order of 102, and it goes down to 99, and now you're down $3. And then stop loss order is I actually don't use it often, but it's you get in position at $100, let's say, and then you want to take profit at $102, but if it goes down to 98, you want to cut your losses at $98, so you'll lose or profit $2. It's also very important to manage your risk when you trade. Very important. Know the percentage you're going to take profit, and know the percentage you're going to lose, or you could lose because I'm telling you right now, when you trade, there's going to be days where you win, and there's days where you're losing. Any trader that tells you that they don't ever lose money, they're lying. The whole point is that you win more than you lose. Hopefully you win 2 days, lose 1 day, or 3 days, lose 1 day, 4 days, lose 1 day. That's the goal. One triggers other is actually when one order happens, let's say you buy it at 100, and now it triggers to put another order at 99. So it's like when one order happens, another order will happen. I don't use it. I have used it once. You're gonna need to make a watch list on Webull or Robinhood. It's all the stocks you're interested in. Put them on a watch list, and you'll be able to watch them very easily, so don't have to search it up every time. And then you can easily scroll through them, click on them, trade right away. There's gonna be rules you need to know when you trade. There's gonna be, when you sell a stock, there's gonna be a 2-day settlement period of your money. So when you sell, let's say you deposit $100, you buy Tesla, you sell Tesla on whatever day. Now that day, there's gonna be a limit on your money. Now there's gonna be 2 days settlement period. So you sold it, but your money hasn't arrived in your account yet. So with that money, let's say you sold Tesla for 500, now you have 500 buying power, right? So buying power is the ability to get a stock into your position. However, when you sell a stock and the money is in your, like, it hasn't settled yet, you can buy another stock, but you won't be able to sell it. I don't know if that makes sense. Let me try to make it a little more simple. So let's say you buy stock, you sell it. Now you can buy another stock with that same money, but you can't sell that stock, that second stock, for another 2 days. If you have a margin account, you'll be able to buy a stock, sell a stock, buy a stock, and sell it again same day. There's no settlement like period. That's the nice thing about a margin account. However, there's like, it's up to you, pros and cons, So a few more terms you're gonna need to know is if you wanna go long or you wanna go short. So in stocks, when you go long, it's you're buying into a stock hoping it goes up. And when you short a stock, it's more of a term if you want it to go down. There's option trading in stocks. So options is a whole like category of trading. There's just regular stock trading, so you buy and sell with your money. Options, it's you pay a premium for 100 like shares of a stock, and you profit based on if you have a call order, you're hoping the stock goes up. If you put a put order, you're hoping the stock goes down. But that can be a whole nother video. If you're just starting out, you're probably learn more before you even think about hopping into options, hopping into all that. If you're just starting out, I actually suggest that you use a paper trading account or start with a really small account. Like I started out with 100, and I made a really good profit, and I started learning more. You will lose some and you would win some, but make sure you learn each time what went right or what went wrong. And when you know that, then you can feel confident that you won't make a mistake next time. If you lose, there's gonna be really bad emotions. You're gonna feel depressed, angry, sad. So when you trade stocks, it's emotions. You have to control your emotions. When you are trading, you can find yourself checking your phone every 2 seconds. I joke, remember me saying this when you do it. Learn to control your emotions. It's about taking money for what money is and not putting your existence into money. If money is just paper, and you have to realize that there are more important things, you don't get suicidal because you lost money in stocks, that's don't get sad. You're just keep learning. I'm sure you'll make money. And if you're making money, don't get overconfident either. Getting a lot of green days, meaning you win a lot of trades or you're investing really well, do not get cocky. It may be luck or it may be skill, but make sure that you know what you're doing, not just getting lucky. You might also get unlucky and know that you're unlucky sometimes, because the stock market doesn't care about you. It will go up and down. It doesn't know who you are. I'm gonna call someone and I'm gonna randomly ask them if they have a question. This is someone that actually asked me to explain how to start. So we're gonna call someone. Let's see. It's gonna put a lot of pressure on them.
Well, why be the only thing I'd be scared about it? Because it's I don't know, in my opinion, it's more of a gamble. Which is it?
That's a great question. Is it a gamble? So if you're someone who has money and you don't want to learn about it and you just invest, you throw it into something like Tesla or Facebook, that might be considered gambling, because you don't even know what you're doing. You're just hoping you make money. But if you know how to read a chart and you figure out is this the highest this is gonna go, or is this the lowest it's gonna be, then you can get in at a good time. And technically that's not gambling, because you know what you're doing.
But things can always go like different ways, can it?
It can go both ways. Sometimes you get unlucky. I mean, it's I'm not gonna say it's not no luck at all. There's some luck in it, but all right. Thank you. Bye bye. So I hope you guys liked the video. Let me know if you guys have any more questions that I haven't answered. I'll make sure to make more videos on stocks in the future. Like, subscribe, and I'll see you guys next time. Deuces.